Welcome traders. In this video we're going to go over strong trend trades and some of the considerations that you should consider in regards to risk reward. There are basically three types of strong trend trades, and on the screen here we have two successful strong trend trades that are a strong trend because the market traded to strong trend support, which we see back here, continued to trade lower, and then reversed to the minor area of resistance. Now, it doesn't have to make it all the way to the minor area resistance, but in this case, again, we formed a strong trend, went back to minor resistance to the tick, and then again had a little bit over a 10-point trade. Here we see a couple of similar strong trend bullish trades, both again where we have a pullback and a 10-point move trading with the VIX, and another strong trend trade, this time for fewer ticks. We only get about 6 points out of this move, again with a green VIX. The second type of strong trend involves a strong trend reversal. And this pattern is seen when we trade from a blue counter trend support or resistance area to the opposite blue counter trend support and resistance area. And then, just as with the strong trend pattern, we retrace to minor, and in this case we had a nice trade worth about 11 points out of that. These type of strong trend trades are covered in the Getting Started and in the video library section, and you can find the strong trend trade patterns here on Learning the Patterns. Now, the point of this video is that there is also a third type of strong trend, and that is when we're talking about just by overall points. Here we have a move from a low to a high of 12.5 points. And generally, when something reaches between 9 and 10, I consider that a strong trend in and of itself. However, in this case, because we weren't close enough to the blue down here, we don't form a strong trend pattern. Here we have a move of 12.5 points, and that retraced again in a similar manner to the minor area of support here, and we then traded higher 6 points into this exhaustion trade. And this exhaustion trade here also illustrates something that I talk about in high risk. In a exhaustion pattern, one of the things that goes back all the way to 2007 is if we have an exhaustion pattern, I've always said that this trend trade from here, which follows an exhaustion pattern, should be considered a higher risk trade. Now, in this instance, the trend trade did in fact fail, goes all the way down to the blue zone, and then gives us a strong trend reversal and a reversal pattern up here also, which then ultimately succeeds. Now, the problem that the trader would have had, and this is what you would be considering as your risk and reward, is that at this point, the VIX was still with us and we were being given a SPY divergence buy signal at this trend trade. But the exhaustion pattern that preceded it was basically a warning that you would be accepting a higher risk and possibly a lower reward if you were to take the long trade where you had the SPY divergence go green from. So here I want to illustrate a trade from Monday, which I personally took. And what we had here is we had a strong trend reversal. The strong trend reversal at the minor support zone gave us a green bloodhound VIX. You can see down here that the VIX was completely green, and that was not the trade I took. As we traded down to here and traded down to the intermediate zone, that tells me that the strong trend pattern is broken. And if the strong trend pattern is broken, we are likely going to trade into this pattern here, which is called a broken reversal. So again, I was given a bloodhound signal with the VIX to trade long from here. However, I knew that the risk reward was not good at that point. In fact, from the beginning of the zone right here to this entry into the broken reversal, that was only 2 points of potential profit, whereas the market traded down 3 points here, and you would have had 3 points of adverse excursion. Now, the trade I took was the short broken reversal trade, which had distribution divergence going for it. And as you can see, that trade worked out for almost 10 points. I took profit in this area right here. Now, you're probably wondering, well, you didn't take the trade with the VIX in either one of these, and that's correct. That's because they were increased risk reward. And the reason I didn't do that is if we look down at the bottom to the KP2 ratio indicator, I put in green on each one of these where there was increasing resistance going into the trade. So going into the trade right here, we had actually the most resistance. And that is why I decided to pass on taking the strong trend trade from this location. And when I saw the resistance build into here, I took that and got short. Now, we also did have a couple of other excellent trading opportunities here and here. Each one of those worked out nicely, and they were trading with the VIX. But I chose to trade against the VIX here based on my experience with the KP2 ratio showing me the increase in resistance. Now, the very next day, we had a very similar pattern at 10:35. Again, we entered this strong trend right here. And again, that strong trend was over 15 points. And we got our pullback to minor. We did have accumulation divergence. We traded down to here at the intermediate. And at this point here, we only got the retracement back to minor. And that kind of is what is expected because we had almost a 12-point move, 47 ticks. So if we believe that a strong trend is at least 10 points, this was 12. It retraced only to minor where we got a special divergence. Again, I took this trade again against the VIX for 2 reasons. You can see that we had special divergence on the SPY back here. So they were short SPY here, and they were again short SPY here at this special divergence trade, and then that worked out for approximately 12 points. Fast forward to Wednesday, and we see once again an identical pattern. When the strong trend trade didn't work from here, from minor support, it traded down to intermediate, traded through, and even though we had accumulation divergence on the ES and special divergence on the SPY, this is a trade that I decided to pass on. Again, because if it was going to work, it should have worked from up here. Again, this got a 6-point pullback back to minor resistance, just a little bit beyond, and we had distribution divergence on the SPY, and that was good again for a 12-point trade. There were several more identical patterns to what I've just shown this week. And the point of this video is not to offer trading advice, but to analyze risk and reward. And in order to analyze risk reward using a pattern, we need to also use all of our tools. Exclusively using only the VIX and SPY divergences is not always going to work. What is also important is to incorporate the use of the KP2 ratio, because that is telling us in real time what is happening with support and resistance. In this series of patterns, we can see that we have a strong trend reversal here from blue to blue, and we see that the strong trend reversal did not work. And we actually have something that's kind of unusual, and we go to an opposite strong trend reversal on the opposite side. Now, what is interesting is the use of the KP2 ratio. As I put here in green, that was increasing support as we go into this counter trend trade. And that could be a very good reason to avoid taking the strong trend reversal. When price traded higher to the opposite blue resistance zone, the resistance was decreasing here. And in this case, what we saw was a strong trend reversal. Didn't trade all the way down to the trend zone, so that's why we don't see a trend trade here. But then that traded higher almost 8 points. But what is interesting is after the initial trade had been made, we got a buy signal right there. Our first buy signal was basically at the apex low. As it traded up about 7 points and then started trading sideways, what we could see here is we could see increasing resistance, and the market barely made it higher. Now, this was going into the 2 o'clock Fed decision on Wednesday, but the point is that we can still read what the market participants are thinking with the KP2 ratio and let that guide our decisions rather than only thinking about just two things. The patterns are important, and the patterns are going to tell us whether or not we have increased risk if we're going to take that trade. There is definitely an increased risk if you were going to take a trade from here. And that is really the point of the video. When dealing in a strong trend, there is increased risks and decreased rewards. One of the other things to consider whether or not you should be taking a strong trend trade would be to look back here at the SPY, and if you had special divergence going into the previous trade as we did here, the pattern here was a strong trend reversal, and the SPY was basically short about 68,000 shares. So we see a failure of the strong trend reversal here. We see a trend trade that also fails. And then that takes us into a broken reversal pattern right here, where we have this time, we have VIX going with us, and this would be a more optimal setup. We then follow that up with a second short trade that takes the market down another 15, 16 points, followed by a third strong trend. See, in what makes this strong trend different is that at this point on the low, the delta from the SPY was over negative 207,000 shares. And then as price traded back to the minor resistance, they were again short 15,500 shares. And then that trade worked for a little over 7 points. So you can see how if we use our numbers, we can make better decisions on whether or not we want to get involved in a strong trend and whether or not a strong trend is going to work based on the delta in the SPY and in the ES. I want to thank you for watching, and if you should have any questions, please let me know. Stay safe. Have a good day.